Hey everyone, welcome back for another deep dive. Today we're going to be taking a look at the fertilizer sector in Pakistan. Specifically, we've got a research report here from Taurus Securities. So it's kind of cool. We're getting like a little sneak peek into the world of financial analysts and how they're looking at this sector. And, I know fertilizer might not sound like the most riveting topic, but trust me, there's some twists and turns in here and, some interesting takeaways I think you're really going to enjoy.
Absolutely. And I think, it goes beyond just like bags of fertilizer, right? We're going to be talking about economics. We're going to be talking about agriculture, even government policies, all through the lens of this, one sector, which is really kind of fascinating.
Yeah, it's a really good point. And so let's start with the big picture.
Yeah.
So this report focuses on October of 2024.
Hmm.
And one of the first things that jumped out to me was that the overall fertilizer offtake in Pakistan shot up massively in October compared to September. Is a 40% increase,
Yeah.
which is really significant. So, it's driving that.
Yeah, it's a huge jump, right? And one of the big factors behind this is a government initiative called the Kisan Card Program. And what this is doing is it's actually providing interest-free loans to small farmers. So this is really helping them afford essential inputs like fertilizer and seeds. But it's not just, simply a handout, right? It has broader implications. If these farmers are able to produce more because of access to these inputs, it could have positive ripple effects throughout the entire agricultural system, even the economy.
Yeah, that's interesting. It reminds me a little bit of those microloan programs that we've talked about in the past, where
Mhm.
sometimes, that little boost at the very, base level can really make a difference. And you're right, it's not just, market forces that are at play here. There's this really interesting kind of social and economic angle that's happening too.
Right. And I think it's those second and third order effects that are really intriguing. Like if farmers have more money, are they going to invest it back into their businesses? Are they going to be able to hire more people? Is it going to lead to more economic activity in rural areas? So these are questions I think are worth exploring further.
Yeah, absolutely. Lots to think about there. Okay, so let's break down the fertilizer market a little bit further. So while we see this, overall booming, market, urea offtake actually dipped by 2% month over month. So, what's going on there?
Yeah.
It seems kind of counterintuitive, right?
Yeah, it does seem a bit odd at first glance, but when you dig a little deeper, it starts to make sense. So a couple things are happening here. First off, October is typically a slower season for using urea, so naturally demand is going to be a little lower. Secondly, the price of urea has been creeping up, and that's going to impact how much farmers are willing to buy, especially, given all the other economic pressures that they're facing.
Right. So those cost factors might be playing a role in, some of the different company dynamics that we're seeing here too. The report shows that FFC and FFBL actually saw their urea sales drop, while EFERT actually had a huge jump in urea sales. So what do you think's going on there?
Yeah, that's an interesting one, right? So it could be a few things. Maybe EFERT was just better positioned to adapt to these changing market conditions. Maybe they had, more competitive pricing, or they had better distribution networks that allowed them to get their product to more farmers. Or maybe they just had, a smarter strategy in terms of targeting specific segments of the market. It's hard to say for sure without more information, but it definitely highlights that there's more to this than just overall market trends.
Yeah, it's like a little fertilizer mystery playing out.
Yeah.
Okay, so we've talked about urea, which, saw a bit of a dip. But let's move on to the real star of the show here, which is DAP. So DAP sales absolutely skyrocketed in October. They increased by 1.3 times compared to the previous month. So that's a really serious, growth spurt.
Yeah, that's impressive growth. And I'd say the Kisan Card program we talked about earlier probably played a role here. Remember those farmers who are getting those interest-free loans? They've got more cash on hand, and they're more likely to invest in essential nutrients like DAP.
Yeah, and plus, we have to think about the timing here, right? It's the start of the Rabi season in Pakistan, which is a major planting period for crops like wheat. So naturally, that's going to drive up demand for DAP. But even within this, overall DAP boom, we're seeing some interesting company dynamics again. So FFC and EFERT are doing really well. They're seeing, big increases. But EFERT actually saw a decline in their DAP sales.
Hmm.
So do you think this is just, a blip on the radar, or could this be something bigger?
Yeah, it's hard to know for sure without more context. It could be related to, each company's production capacity, how much DAP they actually have on hand, or even just, strategic decisions they're making behind the scenes. But it does raise a question, right? Are these just short-term fluctuations, or are we seeing like a bigger shift happening within the fertilizer market?
Yeah, something to definitely keep an eye on. All right, so let's talk about prices for a minute. The report says that domestic urea prices actually dipped slightly in October. But DAP prices inched upwards. So what do you think is going on with these price fluctuations?
Well, domestic fertilizer prices are always influenced by a whole bunch of factors. You've got supply and demand dynamics, both domestically and globally. You've got production costs, government policies, seasonal variations. So it's really kind of a web of interconnected elements that all play a role.
Yeah, it's like a really complex equation that they're trying to solve for.
Yeah.
And, speaking of the global picture, the report also mentions urea prices from China and the Middle East, as well as DAP prices coming out of Australia. So why is it important to consider these international prices when we're talking about Pakistan?
Well, that's because, in today's world, the fertilizer market is globalized. So what happens in one part of the world can definitely have an impact on prices elsewhere. For example, if the price of urea goes up in China, that can make imports to Pakistan more expensive, and that can push up local prices too.
It's like a global domino effect, but with fertilizer instead of dominoes.
Exactly, and it just goes to show how interconnected everything is in today's economy. Right? You can't just look at one country in isolation. You have to understand the global forces that are at play as well.
Right, and that's why it's so fascinating to kind of take a look at these reports,
Yeah.
because we can see how these different pieces all fit together. So we've got a pretty good handle now on what happened in October, kind of looking backwards. But what about the future? What does the report say about where things might be headed?
Well, in terms of urea, the report predicts that offtake will probably bounce back as the Rabi season kicks into high gear. As more farmers start planting their wheat crops, they're going to need more urea, so that makes sense.
So that seems pretty straightforward, but it sounds like the future of DAP might be a little bit more uncertain.
Yeah, there are a couple of things that could throw a wrench in the works there. The report mentions a potential gas supply disruption that could impact FFBL's production of DAP. And natural gas is a key ingredient in producing certain types of fertilizer. So any disruption in that supply chain could have ripple effects throughout the market.
Okay, so what does that mean for farmers? Are they going to be left high and dry if DAP production takes a hit?
Well, if domestic DAP production can't keep up with demand, Pakistan might have to rely more heavily on imported DAP, and that could lead to higher prices for farmers and potentially even some supply chain headaches.
Yeah, I could see that being a real problem. So it sounds like the government's got a tough job ahead of them trying to make sure that there's enough DAP to go around.
Yeah, they're definitely walking a tightrope here, trying to balance a few different priorities. On the one hand, they want to make sure that DAP is affordable for farmers. But on the other hand, they also need to ensure that the fertilizer industry in Pakistan is healthy and sustainable.
Yeah, so speaking of the government, the report mentions that they have a plan to try to reduce local DAP prices by 3,000 Pakistani rupees per ton. So do you think that's going to be enough to make a difference?
Well, it's hard to say. It's definitely a step in the right direction. Making DAP more affordable would certainly help farmers and could potentially boost agricultural output. But there's a risk too, right? If prices are set too low, it could discourage local companies from producing DAP because they might not be able to make a profit. So it's a delicate balancing act, and it'll be interesting to see how this plays out.
Yeah, it seems like they're trying to thread the needle here.
Yeah.
All right, so we've talked about, the overall market, we've talked about urea, we've talked about DAP, we've talked about pricing, government policies, but let's shift gears a little bit and talk about something else that's going on in this sector, which is this trend of mergers and acquisitions. So the report highlights some pretty interesting activity happening on that front.
Yeah, it's definitely been a busy time in the boardroom. So FFC, which is one of the major players in the Pakistani fertilizer market, is making some big moves. They're increasing their stake in another company called AGL with the goal of eventually becoming the majority owner. And there's even talk of a potential merger between FFC and FFBL, which is another major fertilizer producer in Pakistan.
Okay, so those are some pretty big moves. So what do you make of all this activity? Is it a sign that the fertilizer sector in Pakistan is consolidating?
It definitely seems that way, and consolidation can be a good thing in some ways. It can lead to greater efficiency and economies of scale, which would ultimately benefit everyone. But there's also a potential downside. Less competition could mean less pressure to keep prices low. And that's not necessarily good news for farmers or for consumers in the long run.
Yeah, it's a classic kind of double-edged sword, right?
Exactly. So it's something that we'll need to keep a close eye on as these mergers and acquisitions play out.
Okay. And for our listeners out there who might be, thinking about investing in the fertilizer sector, the report names FFC and EFERT as their top picks.
Yeah, those are definitely two companies to watch right now.
All right, so we've covered a lot of ground here today, from government programs to company performance, global market trends, potential mergers. It's been a fascinating and slightly unexpected. journey into the world of fertilizer. But we're not done yet. We're going to be back in just a few minutes to continue our deep dive into this complex and surprisingly compelling sector, so stay tuned.
Welcome back to our deep dive into the Pakistani fertilizer sector. When we left off, we were talking about this trend of consolidation in the industry.
Right, with those big mergers and acquisitions on the horizon. But before we get back to the boardroom, I wanted to kind of circle back to something that's been on my mind, which is this uncertainty surrounding DAP supply. So what are the long-term implications for Pakistani farmers if domestic production just can't keep up with that demand?
Yeah, that's a really crucial question. So if domestic DAP production, falters, due to things like that potential gas supply disruption we talked about, Pakistan might have to lean more heavily on imported DAP. And that has some potential downsides. First off, relying on imports often means higher prices, which would directly impact, farmers' bottom lines. And then secondly, it could create some vulnerabilities in the supply chain, right? What happens if global DAP prices suddenly spike? Or what if there are logistical challenges with actually getting those imports into the country? So these are things that policymakers are going to have to consider very carefully.
It seems like the government's walking a tightrope here, trying to balance affordability for farmers with the need to ensure a stable and profitable fertilizer industry.
Exactly. They're trying to juggle a lot of different factors, and there's no easy solution. We talked about their plan to try to reduce local DAP prices by that 3,000 rupees per ton. That's a prime example of, their efforts to make fertilizer more accessible. But it also carries some risks, right? If prices are set too low, it could discourage local companies from actually producing DAP if they can't make a profit. So it's a real dilemma.
It really highlights how interconnected all these issues are. Government policies, market dynamics, global trends, the livelihoods of farmers. It's like trying to solve this really complex puzzle where every piece affects all the other pieces.
Yeah, that's a great way to put it. It's not just about fertilizer. It's about understanding the bigger picture of food security, economic stability, even social well-being in Pakistan.
Right, exactly. And speaking of the bigger picture, the report also touches on international fertilizer prices, specifically urea prices from China and the Middle East, and DAP prices coming out of Australia. And you mentioned earlier that the fertilizer market is globalized. Can you break that down a little bit more for our listener? How do these international price fluctuations actually impact what happens in Pakistan?
Sure. So imagine like a global seesaw, right? So the different regions representing each end of that seesaw. When prices go up on one side, it affects the balance on the other side. So what happens in China's urea market, for instance, can directly influence what Pakistani farmers pay for their fertilizer. If international urea prices rise, it can make imports into Pakistan more expensive. And that can push up local prices, too. It's all interconnected.
So even though Pakistan has its own domestic fertilizer production, it's still heavily influenced by what's happening globally.
Absolutely no country is an island when it comes to commodities like fertilizer. And this interconnectedness is only increasing with globalization.
All right, so we've got this complex interplay of domestic factors and global influences, all shaping the Pakistani fertilizer sector. So what are some of the key takeaways that our listeners should keep in mind, especially if they're interested in this market from an investment perspective?
Well, I think first and foremost, this is a dynamic sector with a lot of moving parts. Government policies, company performance, global price trends. It's all constantly evolving, which means there's potential for both risk and reward. So investors need to stay informed and be prepared to adapt to changing conditions.
Right. And what about those company-specific dynamics that we were discussing earlier? With some companies thriving while others are struggling. What does that tell us about the future of the sector?
I think it suggests that agility and adaptability are really key. So companies that can respond effectively to market shifts, whether that means adjusting pricing, optimizing their distribution networks, or even diversifying their product portfolios, those are the companies that are going to be best positioned for success in the long run.
Yeah. So it's not just about, size or market share. It's about being smart and strategic. Now, I know the report highlighted, FFC and EFERT as top picks for investment. But with all of this uncertainty swirling around, are there any red flags that investors should be watching out for?
Yeah, that's a good question. I think one potential red flag is over-reliance on imported raw materials. We already talked about that potential gas supply disruption for FFBL, but that's just one example. Any disruption in the global supply chain for key fertilizer ingredients could impact a company's bottom line. So investors need to assess how vulnerable a company is to these kinds of external shocks.
That's a great point. It's not just about the financials. It's about understanding that broader geopolitical and economic landscape that these companies are operating in.
Exactly. A savvy investor looks beyond the balance sheets and considers the bigger picture.
All right, so we've been, analyzing data and discussing market trends. But at the end of the day, this is about real people. It's about the farmers who rely on fertilizer to grow their crops and feed their families. So what are some of the human-level implications of these trends that we've been discussing?
That's such a crucial point, and it's something that we should never lose sight of. The fertilizer sector might seem kind of abstract at times, but it has a very real impact on people's lives. For farmers, access to affordable and reliable fertilizer can mean the difference between a bountiful harvest and a lean season. And their success or struggle ripples out to the wider community, affecting food prices, economic stability, even social harmony.
So it's not just about economics. It's about livelihoods, food security, the well-being of entire communities.
Precisely. And that's why it's so important to, understand the complexities of this sector and to have, informed discussions about the challenges and opportunities that it presents.
And that's exactly what we're trying to do here. We're taking a complex topic, breaking it down into these digestible pieces, exploring the nuances, connecting the dots. So our listener can walk away with, a deeper understanding.
I love that approach. It's about empowering people with knowledge and encouraging them to think critically about the world around them.
Okay, so, we've covered a lot of ground. From the nitty-gritty of fertilizer production to these broader implications for Pakistan's economy and society. So as we head into the final part of this deep dive, what are some of the key takeaways that you want to leave our listener with?
I think the most important takeaway is that the fertilizer sector is far more complex and interconnected than many people realize. It's not just about, bags of chemicals. It's a microcosm of global trade, government policy, market forces, and human needs. And understanding this sector really requires a holistic perspective that takes all of these factors into account.
We can't just look at the numbers in isolation, right? We need to understand the context, the connections, and the human stories behind those numbers.
Yeah, right. I think the other thing to remember is that this is a sector that's in constant flux. What's true today might not be true tomorrow. So staying informed and adaptable is key, whether you're a farmer, an investor, or just someone who's, interested in understanding the world a little bit better.
So true. And, I know we touched on these mergers and acquisitions earlier, and I know you're itching to get back to that. So let's dive back into the boardroom and see what's brewing in the world of fertilizer mega deals. Stay tuned for part 3. All right, so we're back for the final part of our fertilizer deep dives. And as promised, we're heading straight back into that boardroom to talk about those major mergers and acquisitions brewing in the Pakistani fertilizer sector.
Yeah, it really is like watching a game of high-stakes chess, with these big companies making these strategic moves to try to position themselves for the future.
Exactly. Remember we were talking about FFC increasing their stake in AGL and that possibility of a merger between FFC and FFBL. So let's break down, what these power plays could actually mean for the sector as a whole.
Yeah, so, on the surface, it looks like a classic case of consolidation, right? You've got big companies joining forces to create even bigger entities. And, there are some perceived benefits to this kind of consolidation, potentially achieving greater efficiency and economies of scale. In theory, this could lead to lower production costs, which, might even translate to lower prices for farmers down the line. But of course, it's never that simple.
Right. There's always another side of the coin.
Yeah.
So what are some of the potential downsides of this kind of consolidation?
Well, one of the biggest concerns is, the impact on competition. When you have fewer players in the market, it can create an environment where those companies have more leverage to set prices, and that can lead to higher costs for farmers and eventually higher food prices for consumers. It's a delicate balance, and regulators will need to keep a close eye on how these mergers play out to ensure that there's still fair competition.
Yeah, it really makes you wonder if this consolidation trend is driven more by a desire to increase efficiency or to gain more control over the market.
That's the million-dollar question, isn't it? And it's something that analysts and policymakers will be scrutinizing very closely. But let's not forget the potential benefits either. Consolidation can bring in new investment, it can drive innovation, and it can improve access to markets for smaller players who might get absorbed into these larger entities. So it's not all doom and gloom.
That's a good point. It's important to look at all sides of the equation. So let's imagine for a second we're sitting in a boardroom right now listening to these CEOs discuss these mergers. What do you think their main arguments would be?
Oh, I imagine the CEOs would be emphasizing the potential synergies and growth opportunities that these mergers create. They'd probably talk about streamlining operations, leveraging shared resources, and expanding their reach into new markets. And they likely point to the benefits for shareholders in terms of increased profitability and stock value. But, they'd also need to address those concerns about potential job losses and the impact on competition. It'd be a fascinating conversation to eavesdrop on.
I bet all right, so let's zoom out a bit and connect this back to our listener. Why should they care about these mergers and acquisitions? What does it all mean for them, even if they're not, directly involved in the fertilizer industry?
Well, even if you don't own a single share of stock in a fertilizer company, you're still affected by what happens in this sector, the price of food, the health of the agricultural industry, and even the overall stability of the economy. All of these things are intertwined with the fertilizer market. So understanding the forces at play, like these mergers and acquisitions, can help you make more informed decisions as a consumer, as a citizen, and even as an investor.
That's a great reminder that, even seemingly niche topics like fertilizer can have these ripple effects that touch all of our lives.
Uh,
So as we wrap up this deep dive, I want to leave our listener with one final question to ponder. We've talked about the uncertainties around DAP supply, the potential risks and rewards of consolidation, and the government's efforts to balance affordability with industry profitability, given all of this. What do you think the future holds for the Pakistani fertilizer sector?
Well, it's tough to predict the future with any certainty, especially in a sector as dynamic as this one. But one thing's for sure, it's going to be an interesting ride. We're likely to see more consolidation, further technological advancements, and ongoing challenges in balancing supply and demand. And of course, government policies will continue to play a crucial role in shaping the landscape. But ultimately, the success of the Pakistani fertilizer sector hinges on its ability to adapt to changing circumstances, to meet the needs of farmers, and to contribute to the long-term prosperity of the country.
I love that optimistic note to end on. We've explored a lot of complexities and even some potential challenges, but at the end of the day, the fertilizer sector plays a vital role in feeding the world and supporting economic growth. And it's a sector full of innovation, resilience,
Hmm.
and people who are dedicated to finding solutions to complex problems.
Absolutely. And who knows what amazing breakthroughs and innovations are just around the corner. Maybe someday we'll be talking about, personalized fertilizer blends that are tailored to specific crops and soil conditions, or sustainable production methods that minimize environmental impact. The future is full of possibilities.
I can't wait to see what happens next. And to our listener out there, thank you for joining us on this deep dive into the fascinating world of fertilizer. We hope you've gained some new insights and maybe even a newfound appreciation for this often overlooked sector.
Hmm.
Remember, knowledge is power, and the more we understand about the world around us, the better equipped we are to make informed decisions and contribute to a brighter future. Until next time, Amita.